Welcome to Valucop YouTube channel. Today I will be explaining to you what support and resistance mean in technical analysis. When analyzing the movement of a coin, or how well a coin is going to do, or how well a crypto will do, we put two things help us to know if a coin will do well, if a coin will not do well, and those two things are technical analysis and fundamental analysis. Now, technical analysis has a whole lot to do with you understanding the price action, the movement of coins. So indicators and the candles and everything on the chart helps you to predict the movement of a coin or the price action of a coin. Then fundamental analysis has a lot to do with fundamental analysis has a lot to do with news, partnerships, information. This one, if a coin is going to do well, you will see a news backing up that coin. Like if there's negative, the market thrives a lot on fear and greed. Fear and greed can determine whether the market might be bullish or might be bearish, whether it's going to go up or it's going to go down. There'll be an uptrend or there'll be a downtrend. So these two things would help you if you work hand in hand with both your technical analysis and your fundamental analysis. You will understand, you will know what to do with your cryptos and how to maximize your cryptos. So today we'll look at some things in today's video. So we'll talk about support and resistance today, and what to do when this support and resistance break, how to recognize the fake breakouts and breakdown, and where you can put your stop loss. So now the concept of trading, both the resistance, support and resistance are like one of the most discussed attributes of technical analysis, and these terms are used by traders to refer to the price levels on charts, and then in order to understand the price action of an asset. Now, support and resistance is one of the most used techniques in technical analysis, and it looks easy, it seems easy, but it is difficult to master. So like that's why crypto is simple when someone else is taking up all the whole loads off you and then giving you information on what to do, what to buy, and when to sell, and all that. But if you want to master it for yourself, it will take you a whole lot of more time to do this. So today we're going to take a little time to understand one or two things about this support and resistance. So support and resistance identifies price levels where historically the price reacted either by reversing or at least by slowing down to and then the previous price behavior at these levels can give you clues for future price behavior. Previous price of a coin can give you clues to future price behavior. Of course, we have scenarios whereby there are newly listed coins and you can't really predict how well these coins will do by their price action, previous price action, because there's not even any history to understand it by. But the more a coin is out there, the more there are chances for you to be able to figure out the future price actions by the previous support and resistance. So there are many different ways to identify these levels and to apply them to trading. So you can identify support and resistance. Of course, the higher, like I just said earlier, the higher time frame you have, the more time frames you have, the more relevant you will be able to figure out the support and resistance. So what is a support? Support is a price level whereby when a downtrend of a coin is expected to pause due to probably concentration of demand or buying interest. Like, you will recognize a support when a coin is going down, it gets to a point, it just pauses because there's a lot of demand and there's a lot of buying interest at that point. Then as the prices of these assets, drops, demand for it increases, forming support line. However, the resistance is the price level whereby an uptrend of a coin gets to, and then it pauses to people now start selling of the assets. So as the price of the asset increases, more traders start taking profit, and then this results in a drop in the price. So that forms the resistance line. So we have this is as you can see now, you will see the horizontal support line, and then you see the horizontal resistance line. You see the support is below and the resistance line is above. So next is, how do you draw a support line? So this support line can be easily identified when you look at the chart. Like we said earlier, a support is where the price bounces back, and then look for those points where the price bounces back many times and draw a line connecting all the supports. Like as you can see in this video, you will see those points where by a price got to, and then it bounces back and goes up, gets to, bounces back and goes up, gets to, bounces back and goes up. So you just draw a line at those points. It shows you what price, it will show you at what price the support is. So it will give you the horizontal support line. Like on this chart now, you're getting like two supports that looks exactly the same. So you look for points whereby a price got to, and then it bounces off and goes up, bounces off and then goes up. So next one is we're looking at the drawing the resistance line. In the resistance line, you see a place whereby the price got to and it got rejected, and then it started going down. Like at that price whereby at the point whereby the price couldn't go up anymore and gets rejected, and it starts going down. So you can draw a line there. You draw a line to connect those points whereby, so that price there is very significant to show you the resistance point. So the market tests its resistance, and then traders start taking their profits that results in a drop in the price. So you need at least 2 points to be able to draw a valid resistance line. Like you need like 2 points at least, like 2 points to be able to say, okay, this is the price whereby the increase in price got to, and then traders started selling off and then taking off their profits. So you can easily get a valid resistance line at minimum of 2 points at least. So where do we say that a breakout happens? Now a breakout happens when the price breaks the resistance line and trade above the line. That line, when you draw that support line, when you draw the support line at the resistance, like when you draw the when you draw the resistance line, and then you notice that the coin has broken that resistance line and starts trading above that line, that's called a breakout. Now market turns bullish after a valid breakout, and traders start buying and reopening long positions in that asset. Traders start opening and then starts longing. People that trade margin and leverage and futures, open a long position when there is a valid breakout line above the resistance line. So the more times the resistance points get tested, the weaker it becomes. Like if the resistance point comes back again, the more time it gets tested, it becomes weaker. So there are high chances that it's going to go down beyond that resistance line. So majority of traders to be waiting for a breakout of the resistance line to open long positions. So this really help you if you're a future trader or a margin trader. You can tell if you can long a trade or if you can short a trade. So a valid breakout will give you good profits, in coming hours, days, and weeks, depending on the time frame you're using. I'll explain the time frame. You say time frame based on the candlesticks. You'll be able to tell in an 1 hour, 15 minutes, 4 hours, 6 hours, 1 day time frames. So always, before you long a trade, just wait for the confirmation of that breakout. Don't open a trade instantly because the breakout might be a fake one. So, and you might end up losing your money. So what happens in a breakdown? Now, a breakdown is when a support line, is broken downward. Remember, the support line is the one you draw below. And if instead of the price going up from the support, going up, it breaks that line and starts going down, the market turns bearish. When the price, after you've joined your support line, normally when you join your support line, you're supposed to tell you that, hey, this coin will start going up from here. But then instead, there's a breakdown from that support line. You start going down. And start going down. It means that the market has turned bearish. So it's very good. As soon as you see a breakdown, it's a very, very good idea for you to close all your long position, because you might get liquidated or it's definitely going to hit your stop loss. So when you immediately confirm a breakdown, make sure you close all your long positions. Many traders open short positions after the breakdown, so you can easily make profit from shorting your trade if you're doing margin leverage futures and all that. So when you see a breakdown from a support line, you can open a short and close all your long positions so you don't lose money, and then of course you make good trades on that. So always wait for the confirmation of the breakdown. Don't open a trade instantly, because the breakdown might be a fake one, and then you start going up there and you liquidate all your shorts. So how do you know a fake breakout? Now, a fake breakout, or we call it fake out, is happens when the price breaks the resistance line and then instantly comes below the resistance line in the next candle. Remember, I will explain the candlesticks, so the time frame on a candlestick, so you would understand what a candlestick represents in each of the time frames, whether it's 1 hour, 4 hours, 15 minutes, 6 hours, a day time frame. So no candle close above the resistance zone, then you call it a valid breakout. When no candle closes above the resistance zone, you call it a valid breakout. But a fake breakout happens when the price breaks the resistance line. Like normally when it gets to the resistance, it's supposed to start going down, but instead of it start going down, it breaks and start going up instead. In the next candle, depending on your time frame, that's a fake breakout. So this image will show you what is a fake breakout, as you can see in the image. As you can see in the image here. Now, if you take an action, maybe a wrong action in a fake out, you end up wrecking yourself or being a huge loss. So always wait for the confirmation before opening trade. Confirmation comes when you can draw two valid lines, and then you can say, okay, this is confirmed. So next one is we'll look at a fake break. We're looking at a fake breakdown. A fake breakdown is a condition when the price breaks the support line and instantly comes above the support line. All right, so a fake breakdown happens when the price breaks the support line and instantly comes above the support line. Like, no new candle closes below the support line, then if there's no new candle close below the support line, then you call it a valid breakdown. But when a breakdown happens, it's supposed to start going down, down, down. Like, if you join into a support line and there's a breakdown, you're supposed to go beyond that support line and start going down. But then if there's no new candle close below support line, you know that it's a valid one, so you can short that trade. Like, you can see the fake breakdown in this image in this video. You will see the fake breakdown. How you can see the green candle that's just went down, so it didn't continue. It just went up and instead of going down below the support line. So as you can see now, instead of the red candles to continue going down, instead if a green candle formed and went above it. So if you assume now that this is a breakdown and enter this trade, you would have been on loss. So always get a confirmation first before you confirm. So you always wait for that next candle. Like, when you see a breakdown, to make sure to confirm that it's not a fake out, wait for the next candle for confirmation of the breakout or breakdown before you open any new trade. So next one we're going to look at is where can you put your stop loss. Now, one of the risk management of trading, or your portfolio management of trading, is that you must put your stop loss. Now, stop loss helps you to minimize trades. Stop loss really helps you to minimize loss in trades. Either you're booking profit or you're putting a stop loss, so that instead of you losing everything, your equity, your complete trading equity, you'll be able to lose just a part of it. So stop loss is a must for every trade. Cryptocurrency market is really, really volatile, and then sometimes the market plays against all your analysis and expectations, and this stop loss really help you to minimize the loss. And then you wait for better opportunities, because what about cryptocurrency is that the most important thing in cryptocurrency or crypto trading is that we all want to make profits, and make more profit, maximize our profit, and minimize our loss. So always open trades after you've confirmed the trend, after you've confirmed breakouts, breakdown, and all that, so that you don't experience see a fake out and then think it's a breakout, or and the rest of it. So if you are in doubt, always leave it and wait for the next set. So you don't have to enter trades every day. The stop loss must be placed below or above your 7 to 9% of your trade. This is for like when you're doing your spot trading, and then adjust your stop loss according to the leverage used if you're doing margin or futures trading. So always to book your profit above 7 to 9% above in the trade, or place your stop loss, minimize your loss below your 7 to 9% below your trade, like 7 to 9% of your from your entry point, 7 to 9% from your entry point. However you do, if you're booking your profits or if you are minimizing your loss. So in the previous resistance line work as support for the market, and in your stop loss, when you're trying to fix your stop loss, when trying to put your stop loss, the previous resistance becomes support, and then vice versa. vice versa. So the previous support line will work as resistance when the market starts moving upwards. Like after you've drawn your line, the previous line, support line, becomes your resistance point. Like more like let's go back a bit. I'll explain this. Okay, but I hope you understand what I just said. The previous resistance line work as support zone for the market, and then if you want to put your stop loss, your previous support line will become the resistance when the market starts moving upwards. Like the way you draw your lines, the ones the support line before becomes the resistance when the market. So it helps you to calculate, okay, if it gets to this point, if it gets up to this point, like upwards again, this is where it's going to stop. This is where it's most likely going to stop. So you know where to book your profit, upwards or downwards. Like reverse is the case. So how do you understand? How do you read your candlesticks? Remember, in a typical time frame, you will see candles, different candles. Now you look up in your charts, you see time frames like 15 minutes, you see 4 hours, you see 6 hours, you see 1 day, and all that. So in a candle, you see a green candle, you see a red candle. Now in a green candle, you will see that tiny tip above a whole body of green is what we call high of the range. And at the end of that's like more like the highest price, it got that day. Now the lowest tip of the green candle, the lowest tip part of the green candle is called low of the range, more like the lowest price it was that day. And then the price opens, the bottom part of the green candle is at the price. You trace it back to the price part of the chart, you will see that is the place where the price opens for that day or for that time frame. And when the price opens, you see the body of the candle shows you how the price gradually went up, the progress of the price, and then where the price closed for that hour. We're looking at let's take for example, now you're using a time frame of 1 hour, and then you see a candle, the way the candle is. So the tiny tip below shows you the lowest price for that time frame, for that 1 hour. And then you see the lower part of the body of that green candle will show you at what price it opened that particular in that 1 hour, and then how the price grew upwards. And then you see the top part of the body of that candle is where the price closed at for the green candle, and then you see the tiny tip part is the highest price it got to for that 1 hour before it moved to the next candle for the next hour. So, but and that's a bullish candle. A green represents bullish, and red represents bearish. So in a bearish candle, the opposite is the case. It goes up down, like up down. Why the green candle goes down up? So the bearish candle, everything goes down. Everything is going down. Know that when a bearish candle is, I mean the price is going down. The price is going down. So in a bearish candle, you see high. High part of the range, like the price open, the beginning part of the body of the candle shows you at what price did this coin start dropping within that 1 hour or whatever time frame. And then you see at the price loss, the body of that red candle shows you how the price started depreciating, dropping, and then the lower part of the body shows you at what point the price closed at, and then the lower part of the range, at the lower part of the range. So you see the lowest price, at what price was the lowest in this bearish candle, and at what price it was highest in this bearish candle. And then you see at what price it opened, like the price of that coin started dropping, and how it went, and how it eventually dropped. So I hope this was able to help you and you understand 1802 today. So remember, trading is not a one-day game. It's something that you learn gradually. And then if you really want to, it requires a lot of patience, for you to master trading. You can use small funds to start and then master your progress. Don't put all your money at once unless you want to invest. I usually advise people to do, if they are not trading, they can easily invest. They can buy very good cryptos that have a very high percentage of giving profits in the future, and invest some of their funds inside. And when the market is good, the market is bullish, they book their profits and all that. But if you're going to trade regularly, then you need to learn to trade a little bit with a little bit of funds. The more you gain experience and get better, you can start increasing the funds you're using. So in case you want to join my premium channel, whereby I can teach you one-on-one and then also provide signals for you, you can chat me up on WhatsApp on +234 705 778 5083, and there's a whole lot you can learn and a whole lot of information you can get. You get updates on what to buy, what to sell, and all that. Don't miss out on the Genesis technology of the century. So thank you for listening to this video. Don't forget to subscribe and like this video. It's still value first with Valucop.